Okay, hi, let's have a chat about the volume weighted average price. I want to revisit this concept from the bootcamp, and I talked about one of a kind of a specific thing of using the VWAP standard deviation bands basically in your trading. And although I said that I don't use it that much, it has definitely a place in any sort of a swing trading and kind of a longer term trading strategy. So it's definitely something that you can consider using in your trading. I personally use it. I will explain it in a way how I use it for like I said, once again, this is for the interweek, but especially I would use this one for more of a kind of long-term trading. If you are executing on, let's say, H4 chart, or H1 and above basically, and you want to hold trade for a couple of days, maybe a couple of weeks, this will give you kind of a context you want. So what is this? We all know what the VWAP is. I believe I don't have to talk about it again. It was covered in the bootcamp. It's kind of a straightforward thing. And for this chart, this is a let me show you on a BTC, because that's really a clean one there. So this is your VWAP, and this chart right here shows a yearly VWAP. So at the start of each year, you will have this line, this orange line, that will basically start at the beginning of the year and then goes through until the end of the year, and then you will have a new one. So obviously you can use this by yourself as kind of a dynamic SR level, but also what you can do is you will plot a one standard deviation from it. This is a indicator on TradingView, is this one, the koala feed VWAP. You will have it on if you are Sierra chart user, there is a indicator called this one, ECE VWAP. You will find it in your custom studies. It's not in the indicator list, but you will have to go to the custom studies tab here, and it's going to be there basically. So but I know most of you are using TradingView anyway. So you will add the one standard deviation from the VWAP. And how this is going to work basically, it's coming back to the auction market theory and the 5 rules we were kind of talking about previously. So let me quickly remind you them. You have obviously a kind of a 5 auction market theory rules. The first rule is that inside the value area, market is kind of rotational and bouncing from the edges of your value. The second one is if market is coming to the previous value area, it will likely bounce from the POC. The fourth one is the market that is kind of a spending a lot of time at the edge of the value, it's likely to break lower. And the last two are basically if market breaks the value area, and is going to retest it and will continue to this direction. And there is also a last one, which is the let me check for a second. I got a little bit lost in this. I should have checked before the video. Give me a second. I know I forgot one, but I'm not sure. Yeah, if market, basically the last one is that if market comes to the previous value and then accepts inside, it's likely to rotate to the other side, which can be disrupted by this rule here if it's going to bounce from the POC. So you will be treating these VWAP standard deviations the exact same way as you are treating a volume profile, and the same rule are going to apply for them. And you can see that this indicator right here not only shows you the kind of a current year value area, but also plots the levels from the previous year basically. So you have your kind of a current value area and the previous value area. You will be always working with these two. And for example, you can see on this Bitcoin daily chart that we opened the new year, came at this previous, -1 standard deviation, or if you will, the previous value area low. We held through it, went back inside this developing value area and moved higher, but we did not finish the move towards the other side of the value area, because we have seen this kind of one of the laws of the auction market theory, that when market gets rejected from POC, that it will likely to bounce back down, which is exactly basically what happened. And before it happened, it once again retested this edge of this developing value area. So it's a very simple thing, the auction market theory rules apply as well, and you can see how in the past this basically kind of reacted from these edges. This was quite a bit of messy, but other than that, you got these reactions throughout the whole previous year basically, and even year before that. You can also see it in a kind of a simplified version, is that market is either trending or ranging basically. It's balanced or imbalance, it's rotational or kind of a imbalance. So if the market is inside this within these two standard deviations basically, around the VWAP is rotational, it's a ranging market. You can see that obviously it's a huge range here on the daily chart for Bitcoin, but still, as you are inside this value area, you are more likely to bounce around, with the yearly VWAP is kind of your point of control, the key level. But if market is outside of this value area, it will continue trending until this holds, and then you will kind of break below and have this a QM pattern, on a daily, which resulted in a flush lower. But then you can see once again we held basically this kind of a bottom of this value area. Same with the year before that. If you take a look, Bitcoin kind of in March 2020 it flushed down, hit this this was the previous year basically value area low. Obviously it overshooted it by quite a bit, but eventually stopped there, moved higher, and then once we kind of left this balance, which was obviously this once again two standard deviations around the VWAP, you started to basically trending and held the level quite nicely and moved higher from there. Okay, so how do I use this though? That's kind of a important thing, because without having any proper kind of strategy, it's still just a tool and you can get really confused when it comes to real trading. So I have I'm looking at two of these VWAPs. The first one that I'm looking at is on a daily chart, the yearly VWAP with the once again one standard deviation from it. So this is my daily picture. I'm looking at the developing one and also the previous year one, and if we would for example go all the way down to 16k here, once again you have a auction market theory rules. If you will either bounce from the 16k as your value area high, or you will accept inside and play this rotational bias towards the POC and the value area low. If you then bounce from POC, then you can anticipate back to the value area high and higher. Like I said, it's the same as trading with a market profile or volume profile. The rules are exactly the same. So I am looking at the this is the yearly one. Like I said, for a daily chart, this is giving me kind of a context where we are from previous year and overall developing structure on a yearly. This is actually very good for those, for example, who are trading options, or you can just use it as kind of a spot buying and selling guide. Simply you will buy here, when you see the rejection from POC, you will sell your spot. So this is really for kind of a long-term trading. And then I am looking at for our chart, which has a monthly VWAP with 2 standard deviations. Once again, it's completely same as the yearly one. You know, the rules are the same, everything is the same, but this is the monthly VWAP with standard deviations, and also there is a highlighted previous month. You can see this is the indicator. This is how I have it basically set it up. Here are the inputs, and these are the settings. You know, and you can then copy it and change kind of visibility. So this one with monthly setting, I only see it on hourly charts. But if I go to the daily, you know, I won't see it. But I have another one here which will show me this on a yearly chart basically. So yeah, this is the monthly profile, the same thing, you know, the same rules, everything. You can see, for example, you had this level on the yearly profile, you know, after you bounce from the previous year VWAP basically right here, and you were testing this developing kind of a value area high on a year, which is right here. And then if I gonna go to switch to the 4-hour chart, you can see that you are also testing this developing kind of value area high on a monthly basis, and these levels will often overshoot. You need to bear in mind that these are not, you know, for example, if you are trading if you are, for example, trading the QM pattern, you know, so you have kind of a level that looks something like this, for example, and you are taking a long here, you don't really want the price to go below this low, make any sort of kind of like 3 drive or whatever, you know. This is kind of a firm price action structure that have defined level where you don't want to see market trading. These things are different, you know, they are dynamic levels of support and resistance, and more than anything, you know, they will give you the context of what is going on what market environment you can expect, you know, where you are compared to the prior kind of months and the years, rather than just this is a 100%, you know, level you want to be, I'm going to, you know, use it as kind of a support or whatever. So but you can see how these two, for example, in this example, how they overlap, and market really sold off from there. So this is it. I know some people are using a weekly VWAPs, even daily, or, you know, you can use quarterly or whatever. I like to keep the things simple. You know, I'm only looking at these two, at monthly and yearly. Basically, for the intra-week strategy, when I was talking about the trading plans, you know, I talked to on using of time frames. You know, I told you that for any kind of intraday strategy, you can use a daily for kind of a mapping the key levels, so your VWAP can be used there as kind of factor of confluence. Then you can use the H4 for, once again, spotting any sort of FTRs. You know, this is basically a QM pattern. You know, you have a resistance, you break above it with a failed swing, and then you are testing it here again in confluence with all these things here. Okay, so and then you can just use your 30-minute chart for execution. With these two, you have your VWAPs there basically. So this is just something that I wanted to talk about. You can see on a 30-minute chart, actually I have a weekly here, which once again you can see here, for example, this is a prior week high. You know, you have this kind of rotational behavior. Same basically, yesterday you break above it, came back in here, you know, sold off from here. But I'm not looking at it. I only have, for a 30-minute chart, I only have the current weekly VWAP. You know, I don't have any standard deviations or previous levels or anything like that inside the Sierra chart, I mean. So yeah, when it comes to the lower time frames, I'm only using a weekly VWAP as a kind of a line, as a dynamic SR. And once again, it's important when it comes to the VWAP on a week like this, you know, when the market basically tests it and trades through it on multiple occasions, I'm not putting any kind of emphasis to it. Okay, so that's also important. If you have a level You know, if you have, for example, I don't know, like you see this kind of a developing structure here, or let me see if I can find anything better. You know, this, for example, like on this month, this is, I think, December, market is just going kind of back and forth. You know, you don't really expect much from it, but when it's really clean, especially on those kind of first tests, it's a useful tool to have in your toolkit if you are swing trading. If you are day trading, I wouldn't be looking at this too much, because obviously you will once again, I know a lot of people who are actually using these daily VWAPs with a daily standard deviations and doing basically kind of a very similar thing, but these are even less precise than the weekly ones. You know, and market will be on any given day doing a lot of back and forth, especially with these kind of a standard deviations. You know, a lot of people and a lot of kind of strategies in a simple way are based on mean reversion based from a VWAP standard deviations, but and it will work often, but then all you need is one kind of a trend day when market will give you many of these signals of kind of returning inside these standard deviations, and it will then just keep going lower and lower, and you will do a lot of damage to your trading account basically. So I would be really careful being too strict with these levels. Like I said, it's just a kind of a broad map of what you can expect. You know, for example, today Bitcoin had this largest sell-off, you know, due to the war news basically, but we are bouncing back a little bit, and as you can see, here is your prior year, you know, -1 standard deviation from the VWAP, your value area low basically from the previous year. We are moving lower from now, and you were trading below these kind of a swing lows. So if this is going to close, let's say somewhere here, the candle, or even, you know, above this high, you can have a daily bias with a failed swing. You know, you have a clean kind of a failure to break below many daily swing lows. So you will have the daily bias to execute your trade, but also you have kind of a overall context of what is going on. You know, I don't want to be too crazy with this, but if this would kind of set up then on a lower time frames, you know, then you're gonna go to, for example, H4. This is your a kind of a failure bar. You know, this is the high volume candle. If you are going to reclaim it, then you can start taking any kind of longs. You know, if this is going to set up, for example, as a QM, you know, if you would after you know your daily bias, you know, you will break above this level, you will take this high, retrace, and you have your kind of a over under QM setup in here. So you would then take a long, and you know, you have this daily bias of those VWAPs where you can target, you know, as this is a prior year value area low, the next target would be back to this point of control basically. So you know, the auction market theory rules are playing over and over again. Okay, so this was just a brief video. I felt like when it came to these VWAPs, you know, I could do a little bit of a better job to explain them, especially as I have been using them for any kind of swing trades, and I've been trading more options lately, you know, which I'm not taking weekly expirations or anything like that. You know, I'm playing monthlies at least, so any kind of a swing trading system, I feel like it can highly benefit using these VWAPs. Okay, so thanks.